I wish I could hear a drum roll at this point. Ladies and gentlemen, so I present to you Fam Taufik, who will be leading this session. Fam Taufik, you have the floor, please.
Good morning.
Good morning.
Kindly confirm if you can see my slides.
I can see your screen. I can see your slides.
Okay, great.
I'd like someone from the audience to please
From the audience to confirm that.
Yeah, to confirm.
Yes, we have a very short time, and I have about over 40 slides to actually use to drive up this discussion. But again, I think I should sound this note of warning. The topic we're about to discuss is as a theoretical foundation that we cannot do without. And that's why you are going to bear with me. But because of the exigencies of time, there are some slides I will just rush through because I know you have access to the slides at the end of the day and the recordings. And there are some areas where I will spend a bit of the time to actually make sure that I give you detailed information. So the topic is simple: leveraging effective budgeting practices to maximize business profits and ensure positive cash flow. I think we should all appreciate DrugStoc for bringing this session back. It was a popular demand after the session we had last month. So we appreciate DrugStoc for all you guys are doing in the retail space in Nigeria. So let's go deeply into the discussion. So I brought some introductions just for obvious reasons. I won't spend so much on that. You can pick that up. It's just to show you that budgeting lies at the foundation of every financial plan. Therefore, budgeting is essential for any organization. So whether we are in the retail pharmacy, community pharmacy practice, or indeed any form of a business, then this discussion is highly relevant. And I think it is important that we take note of that. So a good budget will help business track its income and expenditure. And that's exactly what we must learn to actually do at the end of this session. We should also remember that a budget is a plan of action for a future period. So we can have a budget for the second half of the year 2024. We can have a budget for the full year 2024, or like some big organizations, they have a budget for 2, 3, 4 years ahead of them. And I think it's important that we state that very clearly. Now, why is this important? Let me tell you for free that the transformation that a lot of people have seen in Vanguard Pharmacy, the success could be attributed to the fact that we were able to understand budgeting and we're able to actually use budgeting as much as possible to our advantage. And my message this morning is that, please, whatever we are going to learn, don't take it for granted. They might look simple. They might look at what you already know or what you're already doing. Just note that you need to take some of a drastic action and a change of mindset to begin to actually put them into practice. So I'm going to be drawing from numerous case experiences that we have explored using budgeting in Vanguard Pharmacy. Again, my overall message with this slide is that without a budget, you may not understand how your business is performing. And if you will permit me to link this session to the data that we had last month, you will soon realize that you can't do a good budget if you are not collecting data appropriately, like we spoke about during the last session. So a budget is a financial and quantitative statement of an operational plan related to a specific time period, which is to be followed during the budgeted period in order to achieve specific financial objectives of an organization. you will see an estimate of cost, revenue, and resources over that period. And you know, the story that I would like to bring this, sometimes in 2015, we were asking ourselves in Vanguard Pharmacy, as at the time we had just one store. And we felt that we have been matured enough in the business to begin to do a multi-store. So the primary challenge we had was, how do we fund these things? And that was when the issue of budgeting started coming into our discussion. And the person leading our financial department then, along with some of us in the top management, started asking some relevant questions. And we eventually found out that the money we're looking to raise for expansion was actually sitting in our business. And because we're able to now do budgeting effectively and efficiently, we're able to extract value from the entire value chain, and we're able to actually open the second store as at the time. And looking backwards, exactly what we've been able to achieve. So, what are the features of a budget? It is a plan expressed in financial terms for attaining some objectives. It is prepared and approved before a defined period, and it shows the planned income to be generated. It also shows the probable expenditure to be incurred, and it indicates the capital to be employed during the period. Let me try and help you to understand this a little more. We are saying that when you are in your pharmacy, or you are in your business, or indeed any endeavor you intend to do, you have to ask yourself, over a period of time, 90 days, 180 days, or 1 year, then you show the income that you are going to generate based on your past history. You also look at your past history and say, okay, for us to generate this income, these are the kind of expenditure that will go into it. Then you are asking yourself, do we need any additional source of capital? And because you are asking a lot of these questions, you are going to be able to get a lot of answers. So, what is the purpose of running a budget? By the time you are working with a budget, it allows you to have targets. You'll be able to set targets for your business. And that will just be a forecast of income and expenditure. And you can even go into setting a target for profitability. Those are the kind of target that you see CEOs of an organization get today. Then, budget helps you in decision making. It's a tool for making decisions, because some things are going to be very, very clear that we are going to know. We are not just going to be spending money haphazardly or based on impulse. Then you are going to be able to do budget performance. How do you monitor the performance of the business? By simply measuring your budget performance. Oh, in the month of June, we said we are going to make a revenue of X naira. At the end of the month, we made a revenue of Y naira. What is the differential between X and Y? And that is what we call the variance analysis report. So the purpose of a variance analysis is to identify the differences between the planned financial outcome and the actual financial outcome. And because you are asking that, it can help you unravel a lot of things. For example, we have a budget for energy costs, which would be the money we are paying to IBEDC or their representative, depending on the part of the country where you are, and the amount of money you are spending on your to buy diesel for your generator. The combination is energy bill. Imagine that your energy bill just changes significantly. You begin to ask a lot of questions. It can even help you to uncover fraud and a whole lot of things in your business. And that's how much you can get from that. So now, what should a budget contain? Like I mentioned, your budget will contain your estimated revenue, expenses, estimated profits, and there are types of budgets. These are theoretical. But once you have access to it, you can actually, so you can have a budget for sales, material, product, purchases, cash, and all of that. But let me just keep the theoretical for that. So, I think I did mention we can also categorize budget based on time, long-term budget, short-term budgets, which can be between these. Let's just keep all of that budget classification. Your budget can be functional, which means that it concerns the business functions. That means you are doing sales budget, production budgets, purchasing budgets, and all of that. Then for those of us that are building into renting or building our businesses, then we talk about capital budgeting, or we even want to buy assets for generators and all of that, then all of those comes in. Now, let me quickly come here, and this is saying requirement of a sound budgeting system. One for me is that you cannot have a robust budget if the top management of the organization are not involved in budgeting. So from the top management, they have to be, the buy-in must be there, and they must give their full support, so that as the CEO or the founder of the business, you are not the one jeopardizing the process in your organization. Then clear, cut, and attainable objectives in terms of setting revenue, setting expenditure, and profitability. For example, if your business generated 1 million revenue in 1 month last year, and this year, you are saying you want to generate 50 million, it is not reasonable. And people begin to ask you, how do you intend to do that? So we have to make sure that the objectives are also attainable. Then they have to be specific and realistic. They have to be well-defined. Lines of authority should be established. Who should be able to approve what expense line? Who should not be able to approve what expense line? And because these things are clear, you find out that there will be a lot of respect in the system. Of course, you can't talk about budgeting without having an adequate accounting system. And remember that continuous budget education to your team is important too. And that means you have to do, you don't have to wait till a period to review. You have to review your budget at the end of the week, at the end of the month, at the end of the quarter, half year, and all of that. Periodic reporting, then effective communication and feedback. We have to provide feedback. Oh, we have given in our budget, we said our revenue should be 1 million naira this month. But at the end of the month, we fell short and we did 600,000. A feedback mechanism has to be created to give the team the appropriately. And for all you care, you might find out that the problem is not even lying with the sales team. The problem is lying with the procurement team. It's because they are not bringing in what they are supposed to bring in at the appropriate time. That's why the sales is not being met. And that can begin to show to you that there is actually a working capital gap in the business. So a whole lot of that would be very, very important. Now, let's closely look into budget and budgetary controls. What does that mean? Budgetary control is a means of control in which the actual results that you have planned are compared with the budgeted results, so that appropriate action may be taken about any deviation within the two. It is a continuous process that helps planning and also helps us in controlling costs. So it is not at the end of the month that you are saying that your cost, energy cost, they spend so much money on energy. But because someone is checking, you can easily put a check at the middle of the month and ask them, we are getting to the red flag. What is happening? And things can easily be sorted at that point. So your budgetary control steps is, one, we have prepared the budget. We compare the budget with the actuals, that's the variance analysis. The goal of this process is to find out to what extent is the performance within or off track. We have said we have budgeted 1 million naira for diesel this month, but we find out that by the middle of the month, we already spent 800,000 on diesel. That means we will probably miss the track. And we can begin to ask a lot of questions to bring in corrective actions, analyze the reason for the deviation, and immediately take corrective actions as much as possible. Budgetary control serves 4 control processes. One, it helps coordinate the business resources. It helps define the standards needed in all control systems, and it provides clear and unambiguous guidelines about the organizational resources and expectation. Of course, if all of that are sorted, it will facilitate performance evaluations of managers and various units. So it will go down into performance appraisals. And you are not just telling people they are not performing, it is the data that you are showing from your budget that is showing them that they are not performing. And people will obviously not be able to argue with data. So what are the basic steps that you need to take so that you can start implementing budgeting in your business? One is you have to determine all expenses and costs to be incurred during the year. And like I tell people, this is forecasting. If you have not been able to keep the data for the previous year, then this first year will be your first data experiment. But if you have been able to know in 2023, we spent 1 million naira on diesel for the whole year. Okay, the price of diesel was how much at different times. This is going to be the likely price of diesel. Then you can predict to a fair extent how much you could spend on diesel consumption in the following year. And that's where what you have to do. Same for salaries. Last year, how much did you pay on salaries? How many employees did you have? At what level of category? You have to define everything. And you are now saying, okay, this year, okay, we intend to add 1, 2, 3 people to our team. What will be their salary expectation? You document all of that and you're able to put it down clearly. What an idea of the salary the business is going to incur in the following year. Then the second step is you split huge cost expenses over a number of periods as deemed fit by management. For example, in accounting principle, if you have bought a capital asset, for example, say a generator that is valued at about 10 million naira, you might not be able to put that into 1 year's budget. You might be able to split it into 2 or 3 years, depending on the accounting principle that the organization is using. Then the third one is to apply the average markup for the per branch, per division on total expenses to cost. That will help you in setting your target. So let's assume that having done all your costs, like I mentioned in the 1 and 2, and everything is 1 million naira. So you now want to go into revenue target. You are asking us, say, okay, what is the average markup for that branch or for the division? Let's say it's 25%. Then you are marking the cost up by 25% to set a revenue target for the location. And it's as simple as that. Then 4 is to determine the average percentage of cost of sales based on historical records. And this is also applied to the targeted number sales, as in 3 above. So you now know that from the revenue that you have gotten, you have your cost of sales and your expenses is also taken care of. And from the above analysis, cost of sales will be deducted from the sales to arrive at the gross margin. I hope that is clear and simple enough. Maybe when we get to Q&A, we can. So now, maximizing business profits and ensuring positive cash flow. The whole reason why we are doing budgeting is to actually ensure that at the end of the day, the business is able to maximize profit and the business is also going to be constantly cash flow positive, which is important. So let me go through this simple variant again. When you have set your sales target, cost of sale is the total amount that goes back to your supplier. And the entire difference actually is the gross margin. From the gross margin, you now remove your overall expenses. You will now be left with your net profit or your net loss. Kindly note that your income or revenue is the sales that you generate. So if, for example, in 1 year, you have generated the total sales of 1 million naira, or in 1 month, you have generated the total sales of 1 million naira, then what it simply means is that By the time you remove your cost of sales, that's the money you are paying to your supplier. Let's say everything is 750,000 naira. You have paid them back to the supplier. The remaining 250,000 happens to be the gross profit. And from that gross profit, you now sum up all your expenses, employee diesel, this, everything summed together. You remove it from 250 to this to know whether you have a net plus, net profit, or a net loss as much as possible. And that's how simple that is. So how do we move from there? Your financials are the black and white indicators of your company's health. And what numbers are you looking at in the next 6 months or next year? So we are moving towards the end of June, and the second quarter, the second half of the year will commence from Monday, 1st of July. So I'm challenging anybody here who have not had a budget before to go back and begin to set this up. What sales revenue are you targeting for between July 1st to December 31st? That's exactly what this is talking about. You can set an audacious sales goal for your business and develop a clear strategy with your team on how to actually achieve this. Now, how are you handling your profit and loss statements? Because it is something that you have to do. Never get carried away by how much revenue you make. Focus on what you keep after paying the cost of goods sold. Remember, the cost of goods sold is the money that goes back to the supplier. For a lot of us that buy from DrugStoc, for example, if DrugStoc has supplied us inventory worth 750,000 naira, and you have used a LD markup to generate 1 million naira, remember that 750 has to be paid back to DrugStoc. That is the cost of goods sold. It is not your money. A lot of us entrepreneurs are fond of spending that money, thinking it is our money, because we are focused on revenue line, which is wrong. It is when you have paid back the cost of goods sold that you are left with the differential. And it's from that differential that you're supposed to take care of your expenses line before you talk about your net profit or your net loss. I hope that is clear. Of course, we challenge people that for you to remain in business, you have to price strategically. A lot of us don't know pricing strategies. We price anyhow, we do price competition, and at the end of the day, we don't keep our eyes on the margin. So please, my message is we must keep our eye on the margin, and we must price strategically as much as possible. And that is the only way that we will remain in business. So we will tell you that you should sell products that leave you with net profits, not just revenue. And I hope that message and my advice will be taken. So how do you want to succeed with this high inflation, customers' purchasing power crashing, increased cost of running business? How do you intend to track your budget performance and take informed business decision weekly, monthly, quarterly, and yearly? That is the challenge that is on your desk as the business owner. Now, the question again here is, do you have a working capital cycle? And the question I'm asking is, do you know anything about inventory holding days? If you buy inventory from DrugStoc, how long does it take that inventory to sit on your shelf before it turns out into cash, so that you can pay DrugStoc continuously? And that is important. It's called inventory holding periods. Typically, we tell retail businesses to hold inventory that they can sell off within 1 week or 10 days, so that the inventories are fresher and the cycle, working capital cycle, is continuous. You're able to pay back your suppliers, and it is healthy and a win-win situation for everybody. I don't want to believe any of us here will be involved in selling credit at the point of retail, because if you do, then you will talk about account receivable collection period and account payable payment period. That will be, but if we don't sell credit, then we expect that all of the account collection should be zero. It means as you are selling your medication, you are collecting your money, and you can actually ensure that things are flying, and you're also servicing your suppliers as best as possible. Now, challenge every expense. That's the beauty of running a budget, because everything is going to be clear to you now. We have said our employee cost will be X naira in the month. Please ensure that you stay within the range. And if your revenue is suffering, you have to come back and look at every expense line and eliminate unnecessary expenses. Take action to save costs as much as possible. That's part of budgetary control. How well do you evaluate your rate of returns on assets? So a lot of us that are owners of our building, we suffer a lot. We don't charge rent, we don't do anything, and we find it difficult to maintain those buildings because we are not measuring the return on the capital asset that we have acquired. So that will bring me into what we call the MAD analysis. And it simply means you manage, you analyze, and you decide. What are you managing? M, you measure your firm's performance. From your budget now, you are able to work closely with your budget, prepare financial statement. That means your financial ratios and operational data becomes handy too. 2, once you have done the preparation at the level of your accounting department, that is one step. The second step is to analyze. Systemically interpret the financial information. You identify your trends, you determine your source of financial outcomes, understand unit economics, and you use the financial information to access strategic successes and failures. And that's very, very important. You decide, making tough decisions as part of what we do as a business owner. Use financial information to provide strategic operations, decision-making. You remedy problems, build on successes, and capture opportunities that are available in that space. Then you communicate the financial implications of your growth strategies to your stakeholders. And people are going to be excited to want to continue to work with you as an employee, or they want to continue to be your supplier because of the kind of feedback that they get. So remember, the MAD framework is simply telling you to measure, you analyze what you have measured, then you decide by taking tough decisions on what you have analyzed. So these are the 5 steps that are involved in the MAD framework. Understanding sources of revenue and revenue growth, understanding your profitability, where are your profit coming from? As the owner of the business, you have to know, so that when you are buying, you are putting more resources into those places. Evaluating rate of returns, return on asset, return on invested capital. Understanding the evolution of invested capital requirement. And remember, like I mentioned earlier, understanding working capital. So in understanding your sources of revenue and revenue growth, please remember, level of revenue and unit sales for the last several years has to be measured. Shift in your mix in revenue sources over the last period of years. What are the kind of product category that are bringing in your resources? Sorry, there's a noise in the background.
Yes, please mute the person that is
Yeah. Then you identification of the drivers of recent revenue growth. Is it because you are adding new product? Is it because you are going into new geographical locations? What is bringing about your growth? You have to measure it. And is it because you have got new customer segments that is bringing that? Or is it because you have got a new partnership with DrugStoc that are able to deliver your medication right on time before your product goes out of stock? The more you can identify, the better you can obviously work to maximize such opportunity. Then understanding profitability. What are the key components of your cost of goods sold? Remember, your cost of goods sold is going to be the largest expense. Is it raw materials? Is it labor? Is it overhead? Like a lot of us found out about 2 years ago when the price of diesel jumped from about 180 to over 1,000, that energy cost became our #1 expense. And if we don't know, we will not know how to tackle those challenges as much as possible. Impact of pricing measures, shift in demand through competition. If you are pricing because of competition, obviously it's going to impact your margin. So product mix too. What sort of a product mix are you bringing on? Customer segment and all of that are also important. Impact of strategic decision by top management. And remember, that is gross margin. You now come back to operating profit margin analysis. What are your cost structure? What are the firm's key operating costs, impact on key changes? Behavior of the firm's cost structure. We need to describe the cost behavior of each of the firm's operating costs, from our fixed cost to variable cost. And we look at each line and make a tough decision. Employee cost for me is a fixed cost, because whether you make sales or not, you have to pay your salaries at the end of the month. Energy falls into that. But you know, some other costs like the use of thermal paper and all of that are going to be different. And we really need to be sure that we understand and we are measuring all of those things. Then, of course, evaluating rate of returns is important. You might need an accountant to run you through this, but there are things that has to be done. Then, understanding the evolution of your invested capital requirement. How have your business resource requirement changed over the last several years? Has your asset grown, asset base shift in composition of the asset? Maybe you are now building property and all of that. You will see the shift and you can measure it. Then consider financing activities. What is the impact of growth on your firm's cash flow? How has historical growth in asset or investment been financed? Have you been financing using your retained earnings, or you have been financing using your interest? If you have been financing, then you have to ask yourself, what are the interest expense? I know today interest expense has gone up to over 30%, because we all know that the economic challenges. So if you are taking any money from any financial institution, it is now very, very expensive, and you are taking all of that into consideration. Then understanding working capital. I did mention that your inventory holding days for me is the greatest challenge that a lot of us face in retail pharmacy. We buy more than we can chew per time, and we do a lot of complaints, and that impacts our operating cycle and our net trade cycle. And we need to make strategic choices to bring these things down and make them as comfortable as possible. I'm trying to be fast because of time. Then understanding working capital. These are some definitions that can help you when you take this slide. They are easy to follow, but if you need a support, you can ask any finance person to actually help you through. So I'm saying that budgeting is not a shackle of spending limits, but a reminder of what's important to you. Like I explained earlier, you have to go through the pain to document this cost, to be able to predict this cost. And the more you go through these budgeting phases, the better you become. We started using budgeting effectively since 2014, and we have gotten better year on year. And for me, I know the journey is painful, but you can go through it as much as possible. Budget is not just a collection of numbers. It is an expression of our values and aspirations. So what are your values? What are your aspirations? You have to put them in the numbers, and you have to challenge your entire team from top management to be disciplined to follow those numbers, go through the pain, and ensure that a good result comes out at the end of the day. Never take your eyes off the cash flow, because it's the lifeblood of the business. We used to hear that cash is king, but if cash is king, they've told us that cash flow is the real blood that is keeping the business alive. And I think it's important that we understand that the pain of documenting budgeting is not going to go away. You can benefit maximally from it. And then the closer you can get to cash flow, the better off you are. Please remember that. And I say thank you very much. I want to apologize again for my speed. I know that I have just got 40 minutes to do this presentation, and I've tried to work closely with the time as much as possible. I would be here to take any questions to further clarify any concept that I've mentioned that may seem strange or challenging to the speakers. Thank you very much.
Thank you very much, Taufik. That was really impactful and powerful, man. I learned a lot of new things about, profit and loss, budgeting. Thank you very much. So we are taking questions now. If you have any question for Taufik on free to ask. Yes, we are going to get the recording. We are going to send the recording afterwards, and we're also going to send in the slides to all the attendees, strictly to the attendees of this webinar. Please confirm that you can hear me, Taufik.
I can hear you. I can hear you. I'm here.
All right.
Yeah.
All right, great. Thank you. So while we are waiting for questions to come in, something that struck me was when I saw something about the P&L statement. So how is a budget different from a P&L statement, if there is a difference? And if there is a difference?
Yes, they are actually different. Remember that your profit and loss is coming at the end of a period. So, for example, we are going to end half year in another few days. At the end of the half year, you can calculate a profit and loss. That is a situation of the exact thing that has happened in the period. Whereas our budget from January to end of June was actually a plan. It is possible we meet it, we exit it, or we don't meet up. So what we are now going to do at the end of half year, in fact, we already set our own date for our in-house review, July 7th and July 9th, 2 full days to bring everybody together to analyze. So what we are now going to do is to look at, between January and June, we said we are going to get X Naira. But in reality, we got Y Naira. And we are asking ourselves, why? Was it, if it is an overperformance, that means we exceeded the number. We are asking ourselves, does that mean we were not audacious enough? Or we didn't predict the level of inflation that we eventually saw? Or, we didn't even meet the target. And we are asking ourselves, what went wrong? And that is why, imagine if we had not done the budget, whatever data that is seen at the end of the year, half year, or the year, we'll just take it like that. And that's what a lot of businesses do. And they'll begin to give you fluences. Yeah, the economy is hard. This is this, that is that. We all saw what happened in Lagos yesterday, Davido's wedding. Am I right? And I kept asking myself, is the economy truly hard? I told you I'll be in Lagos today. All the rooms I was trying to book, all the hotels I called here, all of them were fully booked. And I was asking myself, in this same economy that we are all... So it is the budget that helps you to see based on all of these things. So your budget is your plan. Your P&L is the exact thing that eventually happened. You understand? For another example, we all budgeted for diesel. For a lot of us that uses diesel, we found out that in the course of the year, diesel price crashed from 1,006 down to 1,002 now, when Dangote refineries came on board. The question is, are you going to see that savings in your books of accounts? By the time you are looking at your P&L, your P&L is saying you spend X Naira on diesel. Is it going to be more than what was in your budget or less? So if it is more, you are asking yourself, could this mean that some people are still trying to bypass the system by buying this, claiming diesel at the old rate or what? And that's where you begin to make a lot of strategic questions and strategic decisions and observations will come in. And that's what makes the business environment very, very interesting, really. So it's all of those information are going to come together at the end of the day to be used to make a lot of decisions.
Okay.
So your budget is a separate thing, different from those reports that will be generated at the end of those periods.
All right. Thank you, Fam
Yeah.
Taufik. Yeah. And then you mentioned the inventory holding days, how we should
Yes.
monitor it and like keep our eye on it. So
Yes.
how can we, is there an easy way to just track inventory holding days to know that, okay, this particular SKU or this particular product has been in inventory for this period of time? Is there a way that we can track this?
Yeah. I know DrugStoc work in that space, and I've engaged some of your people in the past, and I know the challenges we all face. The primary problem is, one for me is community pharmacists or business owners must use the appropriate and a very good enterprise resource system. That's the company software. Has to be good. But beyond even software, the question is the people's mindset also has to be very, very right. A lot of people buy based on emotions. So I'm sending my order to DrugStoc, for example. What is informing the order I'm sending to you? Should I just give a blanket ordering for antihypertensive, anti-diabetic, anti-malaria? It should be different. So people should be ready to put in the hard work that is required. And please, like I tell people, our budgeting should be in quantification and not in naira. I will sell 1,000 packs of Coartem in the year 2024 because last year, during the peak of the rain, we saw a spike and we will expect a similar spike this year. So if you are talking in quantification, it's going to be much easier. When the peak period is going to come that you have to stock anti-malaria, you know that's when you are ordering from DrugStoc. But what I see a lot of people do is they just sit back and they just write order based on emotion. Oh yeah, give me 1 carton, 5 cartons. At the end of the day, they are not able to pay up. Products are short-dated and will expire on their shelves. They are going to also be pilfered away. So yes, for me, technology is key, but remember that humans are also in the face of the technology. And the mindset of that person sitting back has to be that you have to learn to do the right thing. And all of these things should fit into our budget as a plan, because the plan is there. We know when malaria sales will spike. We know when Ventolin inhaler or any of those inhaler sales will spike because we've studied and we have a pattern and we can predict and plan. And all of that is what budgeting entails, really.
Yeah, yes, I agree. I know you mentioned forecasting. So by monitoring past trends, we can plan for what to expect in the future. You know when the flu in cold season is from your previous year's data, you know that okay, at this particular time we sold this much cold tablets or we sold this much anti-malaria. So you just forecast and use that data to project to do your projections. Yeah, so that makes sense. We have a question from Commander First. So from Taufik, someone is asking for your number. I think we can have this conversation outside this. So Commander, please reach out to me, and after I have gotten Farm Taufik's permission, I can do that. And then we have another question for new premises who have not broken even and plan to grow its inventory. What should be the most important focus?
In fact, for new businesses, they are the best, really. Like I always tell my team, if what I know today, I knew them 18 years ago when we were starting out Vanguard, maybe we won't be where we are. So today, the person is far away and they can take this knowledge through DrugStoc, facilitating it. And my message is always simple. For any new business, you need to sit on your inventory. A lot of us run after cash, whereas your cash sales is a fraction of your total cash. The bulk of our cash sits on inventory. So if you buy wrongly, like I mentioned the other time, you are going to suffer a lot. You are not just going to lose profit, you are going to lose working capital. And how? Product will get expired, product will get pilfered, product will get damaged in the process of. So please, that person should pay attention to ordering process. and ensure that whatever he or she is buying per time, it is based on, first thing I tell people is you buy weekly, maximum buy every 10 days. So if you are buying from DrugStoc today, Tuesday or Wednesday, I would send an order of product that I will sell from now till next week, Monday or Tuesday. So once I am getting to next week, Monday or Tuesday, I'm preparing another order and I'm paying off that. You are going to have less inventory volumes at time, and it's going to allow you to be more efficient. And with your supplier, you're also going to be super because they see the activity from your end. Imagine someone dealing with DrugStoc, and that person is paying every week into your account. You will give maximum support because that guarantees your company a constant cash flow. And to that person too, that person is going to be super efficient. Like I said, it doesn't mean the process will be perfect. The little things that remains, you are going to be able to see it and you are going to be able to correct it. But the bulk of your product should be focused on that inventory leg. I teach a lot inventory and supply chain management. And I see that there are a lot of gaps in that space amongst retail business owners. We are not wholesalers, so we shouldn't bother holding too much inventory. And the more frequently you can buy, you go to your partner in the value chain, the more they respect you earn. And let's also remember that any product sitting on our shelf is not generating money. Yeah. No matter how big your profit margin is, until that product is sold, there is no margin. Is that right?
Yes.
So until the product is sold, no margin. So if you have brought in the product and it's sold off, fine, that means you are making money. And because you are making money, you should be willing to put in the work. And that is what we call the working capital cycle. So don't break that cycle. The easiest way to break the cycle is to say you want to go to DrugStoc, give me inventory, I will sell for 2 months. And in the process of doing that, you are going to have a lot of wrong errors in it. And you are going to struggle paying back. Some will become short-dated, some will become, and that's how we get into this mess. So for that business owner, I hope my message and my advice is very, very good. And I hope you can be disciplined enough to go through that pain. It is the most important thing that you can take away from this lesson. Remember, it goes down into the budget. So look at it. How many coatem do you need to buy from DrugStoc this week? You only need 10 packs because you sell an average of 7 packs a week. Buy the 10 packs. Or maximum +2, buy 12 packs. Before next week, you have sold off 80% of it. You are going to be able to pay DrugStoc because your margin has taken care of that. And the more you do that cycle, the better it is for everyone in the entire value chain. I hope that helps the person.
Yes, I hope so too. All right. So we have someone else wanting to meet with you. So I think that at the end of the session, we are going to send a communication for anybody who wants to either speak or I'll communicate with Farm Taufik and then we'll know what to send out. Maybe we'll have maybe a 1 month or a 2 weeks mentoring session for people who are interested. I don't know. So we'll definitely get back to you after I have that conversation with Farm Taufik. Yeah, so thank you, everyone. Thank you for the questions. And I mean, this has been very insightful, Farm. Thank you so much for your time. I know how you're squeezing us in and doing this for us and for, of course, our healthcare provider colleagues. Thank you for your time. Thank you for the insights you continue to bring to our sessions. And, these tips are so practical and you have shared really practical examples with us. And I know that a lot of us on this call can relate with many of the things that you have said. Thank you. I'm seeing that's the question. Okay, yeah. So a few things that stood out for me, in today's session, we should set clear financial goals. We should forecast. So this means that the role of data in budgeting is very crucial. So I see how, the last month's session sort of led into this one because data is just crucial. You have to keep track, you have to document, and just keep your eye on the ball. It's really important for you to do that, to document everything that you are doing, all your operations, all the data that you have to keep track of. Really important. Keep your eye on the margin. In fact, that is very important, because like guard your margin with everything that you have, because like Taufik said, that is what essentially that's what you have. And a product on the shelf is that has not been sold, and is not bringing, does not impact on margin anyway until it is so conscious of what you're holding in stock. Really important. Monitor inventory holding days. I think he talks more about that. Challenge all expenses. Really important. Like, so once you have your budget out there in the open, it's looking at you, you're able to even look at what is necessary and what isn't. So it just keeps you disciplined at the end of the day. All right, so we have some other question. Okay, thank you very. When should one think of opening another outlet? That's the question that just came in. When should one think of opening another outlet?
Okay, that's a beautiful question. And I think, again, that answer is inherent in your budget. By the time you are truly working closely with your budget, you will see that period where you are keeping excess cash flow. You will see it, that at every point in time, you have this excess cash flow. But like I tell people, excess cash flow alone is not enough to say go and open a new branch. For multi-branching or chain pharmacy, is more about the level of control, people management, leadership that you can create, because it's not going to be about you any longer. In Vanguard Pharmacy today, we know that our responsibility is the creation of leaders and more leaders. And people throw away their money easily because they think, because they've gotten the cash flow from budget, they can pump it into a new branch without building the people and the systems. So for me, for you to do multi-branching is about, are you going to be able, do you have the capabilities, or you have already created the systems, you have got processes, and you are building the people that can run this show yourself in the business. And those are the things that should sit at the heart of saying you want to go into a chain pharmacy, or it is better you stay in your small store, make your money and invest your money elsewhere, if you cannot go through the rigors of building people, creating systems and all of that. And I know that we shouldn't do it because others are doing it. We have to do it because we have the capabilities to do it. And that has to be clearly stated, so that, because you don't throw, by the time you open the next one and you don't have system processes, you are going to begin to throw money away. So remember, there are some things we call the 3 Ps: the people, the process, and the products. Your company will become the product at the end of the day. So for us, Vanguard Pharmacy is the product. We have got the people that we continue to train and build. Then the processes links the people and the product together. You understand? It doesn't mean people don't commit infractions in the company too. But if infractions are committed, we will know. We will always know. And once we know, we have a clear rule on how to deal with such things. And that's the message. I think I will have to stop here for that person. But that person can reach out to me for more guidance. But in reality, we should know that it is not money that determines whether you can do a chain store or not. It goes beyond the physical cash, because you have the financial resources. It is about those things I mentioned. Thank you.
Thank you, Taufik. Another question is, how do you grow your inventory as a new business while budgeting with limited capital?
Sorry, how do you what?
How do you grow your inventory as a new business while budgeting with limited capital?
Yes, the way to grow is that, I said something that you don't make money until the product is sold. So if you have, let me use some real numbers now. You have invested 1 million naira with DrugStoc this week, and I've ensured that I've bought rightly on product that I can sell off within the month, within the week. So I bought inventory I can sell for 10 days from DrugStoc with 1 million naira. By the end of the week, I've already sold 800 million worth at cost price. Remember, I've got my margins in there. So maybe after doing my overcop, I generated from 800,000, I generated 1.2 million. You know, you are not going to pay salary at the end of 1 week. You plow back all your 1.2 million on the 800 back to drugstore, buy again. And that's the way to grow it. At the early stages, it's not going to make sense. But in the business world, it is compounding. By the time you turn down 1 million with drugstore on a weekly basis, that means in 1 month, your 1 million will have gone back to drugstore 4 times. That means it has generated 4 million naira. And out of that 4 million naira, you have been able to generate a gross margin of, say, 1 million. Out of the 1 million naira, you are able to spend 200,000 on expenses and keep 800,000 and bring it back. So your 1 million, and that's the way. So it's just the discipline to ensure that product that you are putting the money on are going out in terms of sales, coming back to your system in terms of inventory, and that is what I describe as the working capital cycle. Don't break that cycle. The more the cycle continues to run, the more money and the more growth you are doing for your business. You started with 1 million naira. At the end of the month, that 1 million has turned to 1.8 million because you're able to keep 800 out of the 4 times you turn the money. And you are going again the following month. And the cycle, but the discipline to follow through is what a lot of us don't have. And that's why it's difficult and painful to grow when we are small.
Thank you, Fam Taufik. I hope that explains it. Yeah. So there's a question here. How do we factor in the delivery time of drug stocks? So I don't know if you mean drug stock, that's the company, or drugs that are
It's the
stocked
same.
in.
It's the same. It's the same. I understand what the person is saying. So that was why I said, if you are going to buy for, I already understand the lead time. When I place order with drugstore, maybe it takes them 2 or 3 days to deliver to me in my location. So that will inform the period I'm ordering. So today is Wednesday. If I send order to drugstore today, maybe I'll receive the order in 2 days' time. I don't know what the timeline is. You understand? But let's use 2 days. So you're already building that. So if I'm going to buy for 1 week, I will plan with 10 days. Because by the time the inventory is arriving, it will come 2 days later. So the lead time has to be factored in. The person is going into logistics and supply chain questions now, which is important. But remember, in logistics and supply chain, there's something we call the pipeline, and there's something we call the lead time. The pipeline is from the end of the manufacturer to your own end when it goes out to the customer. Everything has to be filled up at every point in time. And that's why your cycle, you must understand the lead time it takes so that that lead time does not create a gap on your own shelf. So let's say you are going to sell Coatem 10 packs in a week. I will expect you, typically inventory ratio says you should keep ratio 2:1. If you are going to sell 1 product, you should keep 2 of it. If you are going to sell 2 products, you should keep 4 of it. If you are going to sell 5, you should keep 10 of it. But at the early stages, you might not have money to do that. So you might want to say, instead of keeping 10, if you sell 5, you can keep 7. But remember that you must understand the lead time coming from the partner that supplies you medication. So it's a lot of work. But if you can be patient and understand it and follow through, it can actually be highly fulfilling at the end of the day.
All right, thank you. Thank you very much, Fam Taufik. This has truly been insightful, and more questions are coming in, more people wanting to have like a mentoring session with you, and I think we can arrange that once I speak with you.
That is not a big deal. It's what I'm used to. The only problem I have is I don't have when the students are not ready. They claim to be ready when they listen to you now. By the time they begin to see the process, people run away. They get tired, they get frustrated. But anybody that is in Lagos or Ibadan can join Farm Alliance Network. That's what we do every month free for people. And even today, they can join and join virtually. It's a regular monthly thing, apart from the one-on-one thing. But anyhow, we can discuss that to bring it to life. It's what we regularly do for people.
Okay. Thank you very much. So we'll be concluding now. As Farm Taufik said, we would like to. This session is a last month's session. So the series strategies for building for business resilience in an inflated economy. So this is the second in that series. And thank you for the questions. I hope that your questions were sufficiently answered, and you are clear on a lot of things. So we have a big announcement. Our next DrugStoc Learning webinar / knowledge session will be hybrid this time, and it will be at the ACPN conference in Ibadan. So we will have a panel session there, a physical panel session at the conference, yes. And it will be on Tuesday, July 23rd by 10 a.m. That's the day of the opening ceremony. By 10 a.m. we will be there, and we expect everybody to be in attendance, especially those of us that will be at the conference. I expect that all the community pharmacists on this call are attending the conference. But anyhow, we are going to see how we can connect, how we can stream it and connect to other people. Other people can connect, and even if you're not there physically, but we urge everyone to be physically present, because there's this thing about being engaging physically, and then you can go on to interact with the panelists afterwards. As usual, we'll be bringing in experts to speak to the experts that you can, after the session, engage with and interact. Now you are asking us for, access to Farm Taufik, but if this was a physical session, after the session, you just walk up to him and like, sir, this is my, you just have that interaction. That's why this is going to be physical, and we want everybody to have access to, the knowledge and the panels as much as possible. So we will send more information about this to us as time goes on, but yeah, that's the big announcement that I was saving for the end. A big thank you to Farm Taufik again for your time, very valuable time, your expertise on the subject matter. Thank you for your engagement. Thanks to all the participants, the attendees rather. It's been an interactive session, and I enjoyed it as well. And I'll just say lastly, finally, that at DrugStoc, the mission always is to empower healthcare providers with all of these things. And I'm happy that many people are, seeking to learn more, attending and wanting to learn more, expand, the knowledge base. I think it's encouraging for us as well. So your engagement inspires us, and we are looking forward to the next set of webinars, especially next month's one, which will be at the ACPN conference. And I hope to see many people there engaging as usual. Thank you once again, and we will get back to you regarding further communication or further conversation with Farm Taufik. Thank you for your time, for staying until the end, and we appreciate it. See you at the next webinar. Thank you. See you in Ibadan. Thank you so much.